Bottom fishing always been trapped. After cut loss, immediately the stock flying away. Learn the double bearish multiply volume bottom fishing model today. After learn this method, my friend successful accurate bottom fish every time. Earn a big profit of 114% in just 17 trading days. What kind of amazing trick is this? It is simple and only require 2 candlestick and trading volume. Then you can bottom fishing easily. Get ready to learn this trick. If this is your first time listening to my stock strategy sharing video, make sure to subscribe to the channel so that you can repeatedly learn my sharing. Today we have 2 models for this strategy that is very practical and useful. Make sure you watch till the end. Let's get straight to the point. This strategy can separate it into 4 methods. First, at the end of the decline, a high bearish volume at the bottom appear first. The second trick is to have a shrinking bearish volume the next day. That is to say, the negative column with the double trading, then on the third day, it stopped falling and closed positive to buy. Finally, the lowest price stop loss position of the key candle. Let's look at the first case. After a period of stock price decline, at the end of the stock decline, a high volume bearish at the bottom appears first. This means a sell-off. It is characterized by significantly enlarged trading volume. In general, the volume at the bottom is required to be greater than the maximum volume at the top of the previous high, or at least the 20 days highest. But can you buy the bottom here? Of course not. Second little trick for bottom fishing is on the second day of high amount of bearish, there will be another shrinking bearish volume. Note that the candle must be bearish and the volume must be multiplied, reduced. Means panic selling in a short period of time, absorbed and digested by the institution. The probability of the market bottoming is very high. This is the amount of double volume shrinkage. At this time, when the third day stop falling and close positive, it is the entry point for bottom hunting. Then the stock price is rise sharply, raised 42% in 33 days. For example, let's take 5168 Hartalega, a glove stock that has grown well recently. A high bearish volume appeared on August 22, and also high bearish volume appeared on February 2023. Why did the market rise strongly just within a few days after high bearish volume this time this year? And after see the high bearish volume August last year, and it keep go into new low. After consolidated 2 months only rise up. The root causes is after a high bearish volume on August, there is no shrinkage of multiply bearish. Then the digest of the log chip is low. If the log chip not resolved, how the main force can easily pull out, then the market is low. But there is the different story for this February. On the second day of the high bearish volume, the shrinking multiply bearish volume immediately appeared on the next day. And it is closed bearish candle too. It means that panic selling is over in a short term being digested by the banker chip. The stock price rise up 50% in a month. So you can see once you learn this method equal of you earn. The stock market is magical. Making money is never been easy. Start with your subscribe this channel and continue learn now. Let's look at this stock again. How we hunt the bottom right time? First of all, there must be a bearish candlestick with heavy volume falling here. Trading volume is much higher than the highest volume in the previous upward process. It shows that panic selling appears in the next day. The stock price continued to fall close at the bearish candlestick. However, the volume of transaction decreased significantly, and it is the shrink volume pattern. Double bearish shrink volume. When the third day stop falling and close positive, then we can enter the market. It raised 88% in the next 6 days tradings. Accurately bottom fishing. Have you mastered this method? Let's take a test at this case. Do you see the model that meet the model? Can reply yes or no in the comment box. At the end of the video, we will give the answer. This stock turned in continue for what went wrong. In fact, the first condition is not fulfilled. High volume is fulfilled, but corresponding stock price is a bearish candlestick, but higher than yesterday close. This is the false bearish but true bullish candlestick. The third condition is to buy only when it closes green. Never enter if there is not close green. Next, let's look at model 2. The conditions are slightly increased. The first condition is the same. The second condition is more about the price requirement. Price must to be multiplied. The third condition is also unchanged. Let's look into this example. Firstly, there is a bearish candlestick with heavy falling volume. Volume is higher than the highest volume in the previous rally. It shows that panic selling appears. The next day, stock price continued to fall and close at the bearish candlestick. However, the volume of transaction decreased significantly. And it is the features of shrinking volume. The price column is double. That is the special meaning of the panic selling is over. The main force will press down and retest the market again. At this time, the stock price will bottom up and rise. The double bearish string model 2 is satisfied. When the third day stop falling and close positive, we can enter the market in time. In the following 18 trading days, it rise 96%. Accurate bottom cash again, never been flushed out. Let's look another case. In this case, at the beginning of the slow decline, first of all, there is a bearish candlestick with heavy volume in the previous rising. It shows that panic selling appears. The next day, the stock price continued to fall and close at the bearish candlestick. However, the trading volume has shrunk significantly and the stock price has doubled. This exactly shrink multiply volume pattern. It shows that the main force took the initiative to test on the market. Once satisfied double bearish volume, then we can enter in the third day after it appeared bullish candlestick. After 15 trading days, raised 461% accurate bottom fishing. Have you mastered this strategy? Double bearish, shrink, and double volume hunting. This is the bottom hunting tactic is the same as another tactic we shared before. There is a magic trick. Friends who like to use MACD to bottom fishing can click to learn my MACD bottom fishing strategy. Before the end, let's summarize today's sharing. First, double bearish shrink multiply volume have two models. Model 1, no requirement on price. As long as the bearish candlestick, then it is fine. In Model 2, in addition on the requirement of doubling the trading volume, they are also required on the share price. It is not just bearish candlestick, but it is a multiply price bearish candlestick. This means that the main force to take the initiative to retest market, get ready the pull up later on. Second, both models are required to increase volume, then decrease volume. Closing bullish candlestick is the enter point. Third, second bearish candlestick lowest point as cut loss point. Fourth, third day's bullish candlestick must be the real bullish instead of fake bullish candlestick. Learn the analysis of price and volume, master the language in the stock market. Do you still have any question on the strategy today? Feel free to leave a message and I will reply everyone. In the next video, we will learn about the move price volume strategy. If you don't want to miss out every great content, subscribe to my channel now. I'm Angie. See you next time. Bye bye.